Welcome back, and it's another week and another all brand new high for the index. Our index is just running like you cannot believe, and it's all driven by emerging markets. Everybody loves emerging markets, but I've got an idea that the whole world, the investors, as always, has regarded all this bad news of a possible recession and all bad things. They just see it as buying opportunities. Why? Because there's still enormous amount of liquidity flowing around the world. But two sectors are actually driving this market of ours. The one is the commodities, and the other one is the technology shares. And we also now see that even the banking shares starts to rise, because everybody just say, we cannot miss out on this rally, we must get in. I think I checked it. In about 19 sessions, there was about 2 tiny days where the market pulled back, and the rest of it was just beautiful rallies day in after day out. Well, let's kick off with some of the requests that we had. I hope that we can maybe finish them. And the first one is Orion Minerals. This is a weekly chart, and the commodity companies, all of them are running like you cannot believe. But this little junior investment, you can almost say, because this company is not yet in production. Orion Minerals is a new company. They I think finished with exploration, but they're not yet in production. They are seeking some finance. I don't know if they have got all their finance, but for me it's quite simple. This weekly chart tells you that the momentum is still clearly to the downside. You can have a look there, look at it. There was a beautiful spike last year. We were happy about it. We were excited about it. But since then, the market just sold it off. Every time that it gives us a little bit of a rally, it just shows you that the market did not like it. What worries me, first of all, before I look at the resistance line, look at this line. There's a possible head and shoulder formation on Orion. And if that's the case, that tells you that if Orion breaks below this neckline, and I'll give you the neckline now, that is sitting at 19 cents. If that breaks, we can maybe see this company going all the way down to 14. And that will be not a good sign. But on the other side, if they do get the money, and I believe that they will get the money, because the whole world is short on copper. There's not enough copper in the world to actually help all the infrastructure spend that needs to be done. I'm not saying just in South Africa, across the world, because what happened in the past is that some of these bigger commodity companies, they always developed. And they was always under the impression, and they always said, but let's develop these mines, because the need for commodities will always be there. And let's sink some new mines, let's spend some money on that. And a few years back, they burned their fingers because they had almost too many mines in operation. Commodity prices fell, and turned out ugly. I can remember that Anglo American dropped to it around, I think it was 50 Rand or something like that. But if you look at Orion Minerals, momentum still down, but on the positive side, we're sitting on a developing of a falling wedge. And this little red line that I've got in there is the 40-week moving average. Now, below this 40-week moving average, we know that it is negative, and that level sits at 22 cents. So only above 22 cents, some of the fundamental players will come in and they will buy the company. Well, this falling wedge above that little level, and I'm going to use that one, 20 cents. And the reason why I want to do that is simple. It will probably break above that line, that resistance line that I'm showing here, there, that resistance line. It will break at about 19 cents. But above 20 cents, we can say that we will have a confirmation. Now, if we have a confirmation on that, that tells you then the share can really pick up. And where can it go to? So let's say we hope that that head and shoulder formation does not play out that I showed on earlier. I hope that this falling wedge will do its trick, and above 20 cents it can maybe move up to 25 cents if it reaches that target. But as we all know, it's early days for this company. They're seeking finance, they are not yet in production, but dear oh dear, when they start to mine some copper, and the copper is starting to come out, and the world is looking for copper, and South Africa as well, we can maybe see a beautiful spike in the share price. But stick to your stop loss. Your stop loss will be, if you buy above 20 cents, use 17 cents as your stop loss, so to protect capital. Well, let's see what is this share showing us in time to come. Well, our next share is Jubilee. Now, Jubilee is one of those companies that we all like, but the unfortunate thing is that Jubilee had all this nasty effect to the downside, and look at it, you can see it's also sold all the way, but suddenly in the last 2 weeks, you saw this beautiful spike. It rallied from R2.20 almost in one go up to 264 in a matter of a week. It gave us a tiny little pullback, but now we're starting to see higher lows, and I like that. For me, it tells me that the momentum is to the upside, and while we're above that line, I just want to show you, while we're above that line of R2.64, the momentum to the top is clearly in place. But what I like about it, apart from the pullback, look at this 40-week moving average. There you are. And the moment it starts to break above that, I like the chart, because then the fundamental guys will also look at it. But for me, there's something important here. If we look at the other commodity shares, and that's why I picked out Jubilee and even Orion, but that Orion is more of a speculative, highly speculative, because they're not mining yet. But Jubilee, they're already in production. And some commodity counters did not rally. And this makes me excited. If you do find a share that's been bottomed out, sold off, and we're starting to see nice higher lows, I like the chart, because then maybe Jubilee can surprise us. But for me, personally, if you want to buy it, you can buy it above 265. Let's use this support line as our support, 251. And I mean, it can maybe surprise us all going up to 277, 294, and I think maybe R3.308 will be our targets to the top. Reason being, look at the share in the past. It showed us it works hard to find a base, then it starts to rally, and the same thing we had here. The base is only just not as big as this base, but still I see a beautiful reversal here. But stick to your stop loss to protect your capital, and then you know that you play safe. Well, let's look at Microsoft, one of those companies in the world also really under pressure. Let's have a look here. Microsoft, there you are, it's coming down all the way. Momentum is to the downside. It's still trading below that resistance line, but what do we see here? We see a beautiful descending channel. Now, this descending channel makes me excited, because I say to myself, if this descending channel can turn into a support, and we all know that a descending channel is always negative in the beginning, but later on it turns out to be positive. But when does that happen? That happens only when this resistance line, and there you are, this resistance line will probably change into a support exactly at the point where the 40-week moving average is holding it back, and that will be at $252 on the dot. Now, above $252, we can maybe see that Microsoft kicks in. We had a beautiful sell-off from $343 all the way down to $220 in a matter of 6 months. But if we can break above that 252 level, we can see this share, and remember, this is one of the giants of the NASDAQ. Where can it go to? Let's have a look. I just want to do a projection here. There you are. If it breaks above that resistance line, there's the resistance line, turn it into a support, we can maybe see this company going all the way up to 304. But what's the bottom line here? The bottom line here is let's rather look for the stop loss, because this is an awkward market. I mean, in actual fact, the NASDAQ and the S&P and the Dow Jones is lagging the rest of the emerging market shares. And I've got an idea, if the emerging market shares or emerging markets are starting to pull back, we can easily see some money going into the S&P and the NASDAQ and even the Dow Jones. Well, I will use my stop loss as 224 just to protect capital and to play safe. Well, our next share is Firstrand. Now, if we look at Firstrand here, I mean, the share is on its brink to change this 40-week moving average into a support, and that will be positive. But I'm looking at this negative resistance line, and it must break above that. Now, what I like about it, remember this is a weekly chart, so if we do find that if we can start to consolidate above this resistance line and the 40-week moving average sitting at this exact same spot, 64.70, if we can break above that, and especially above this line, I want to show you, there you are, then we can see that we've got some higher lows in place. There's a low, there's a higher low, higher low, higher low. But if it breaks above 67.42, I think it's off to the races. Then Firstrand can maybe show us all the way that it can rally to, and I'll give you the levels. The levels is 69 Rand, 69.30, 69.86, and then maybe as high as 72.49. In actual fact, I think it will work hard to get back to 77.12, but in this market you never know. But if you do buy above this 40-week moving average, or if you wait for that, I would rather use my stop loss, and my stop loss will be 61 Rand 90 cents to protect some capital, because we can maybe be surprised if the markets after these massive rallies, especially our market since October rallied a hell of a lot, pull back, we can maybe see all these counters coming back and lose some value. Thank you for watching the show. Visit our website www.fransdeklerk.com for more info.